Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to be with us again here at AusBiz as we get across what we saw overnight on global equity markets, which were mostly higher as investors focused on earnings results. All three major indices in the US began the month in positive territory. The Dow and S&P posting their 8th straight session of gains after strong results from the mega caps of Microsoft and Meta from the previous session. But after the bell, Apple reported earnings and estimated that tariffs would add about $900 million in costs to the June quarter if those rates do not change. It reported weaker than expected sales from China, with revenue down 2.3%. Apple shares were down around 3% in after-hours trade. And Amazon reporting first quarter cloud revenue growth and forecast operating income below estimates, which saw its shares fall around 5% after hours. Amazon Web Services, the company's cloud unit, recording a close to 17% increase in quarterly revenue. Shares in Microsoft surged after delivering an upbeat quarterly growth forecast the previous session for its cloud computing business Azure, the gains briefly pushing Microsoft above Apple to become the world's most valuable company. And Meta also gaining after posting higher than expected revenue on the back of a strong advertising performance. Mobile chip designer Qualcomm plunged after it forecast a hit to revenue from the trade war. Software giant Atlassian reported revenue at $1.4 billion. That's up 14% year on year for the quarter, while it reported a net loss of close to $71 million. The company's stock down some 15% in futures. And Eli Lilly's quarterly results topping expectations, but shares tumbled after CVS Health's decision to drop its obesity drugs a pound from some lists of medicines it covers for reimbursement. And McDonald's earnings disappointing, with a surprise drop in first quarter global sales. Well, the ISM US manufacturing report for April came in better than expected, but still fell to a 5-month low and remained in contraction. The survey's measure of prices paid by manufacturers for imports rose to the highest in almost 3 years and showed tariffs on imported goods are straining supply chains, maintaining elevated prices for inputs. ISM commentary noted that prices growth accelerated due to tariffs, causing new order placement backlogs, supply delivery slowdowns, and manufacturing inventory growth. Well, US weekly jobless claims rose more than expected, potentially hinting at a pickup in layoffs from tariffs, which weighed on the economy in the first quarter. Meanwhile, the Atlanta Fed's GDP modelling of second quarter growth has been revised lower from an annualised rate of 2.4% down at 1.1%. US Treasury yields rose from 3-week lows, the 10-year up around 5 basis points to 4.22%, the 2-year jumping around 8 basis points to 3.72%. And the US dollar continued to bounce back on technical buying, with investors more optimistic about tariff deals between the US and its trading partners. The Aussie trading at 63.8 US cents, and Bitcoin is trading at around $96,500 US. Oil prices, they settled nearly 2% higher after President Trump threatened secondary sanctions on Iran after a fourth round of US-Iran talks were postponed. Brent futures up at $62 a barrel. Copper up around 0.5%. Iron ore fallen back to $95 a tonne. And the gold price steady to close at $3,287 an ounce, having fallen about 6% from its all-time peak of $3,500 2 weeks ago. Well, let's get across what we're seeing stateside. Brad Gasworth joining us from Unearthing Opportunities. Brad, great to have you back on the show. Good to see you again. Let's start first with some of those earnings results. Well, in fact, before we do that, what are your observations about what you're seeing on the market at the moment? Because certainly investors managing to climb that wall of worry at the moment, and we're almost back to where we began prior to Liberation Day.
Yeah, I mean, it's been quite volatile, Andrew. I mean, to say the least. We've had almost a reversal of that sell-off over the last, 10 days or so. But ultimately, I think we're coming into a very volatile time coming into these summer months here. The old adage, sell in May and go away, I think might come to fruition this year for sure. Ultimately, I think there's a lot of uncertainty in the market. There's been some pretty good results for the earnings so far, and we'll talk about that in a little bit. But I do think that there's going to be a little bit of volatility here, and I wouldn't be surprised to see more of a sell-off in the summer months this year.
So, Brad, let's get to those earnings results then. interesting to how this is broken up. Most immediately, of course, we've heard from Apple and Amazon, and certainly tariffs weighing on those two.
Yeah, I mean, Apple made that comment that almost $1 billion will be impacted next quarter. So I think they said like 900 million next quarter, a massive number. But the results weren't too bad. I actually thought the stock was punished a little bit more than what I thought the results warranted. I mean, they saw revenue growth. Their services revenue made an all-time high. They're still kicking on all cylinders. My biggest concern with that company is their exposure to China, which I think is, I think there's more of a downside risk than an upward surprise with news coming from that region. But the earnings weren't too bad. And even Tim Cook said on the call that next quarter they'll be more impacted on the tariff side. Then on Amazon, I mean, really, they had a really stellar quarter. I mean, the top line grew by, I think it was like 17% year over year, which is phenomenal when you think about a $100 billion revenue quarterly company. So, I mean, they're doing quite well. I mean, the AWS, some people were a little disappointed. The number's still pretty massive. I think it's hard to really pick it apart too much there. But ultimately, the numbers were quite solid in those two companies.
Brad, what did you make of Microsoft and Meta? Are they examples of companies, as you say, executing on AI, particularly in terms of that enterprise growth?
Yeah, I think you worded that perfectly, Andrew. I mean, wow, Microsoft really knocked the cover off the ball. They really executed on all cylinders, and the stocks showed that after they reported. Ultimately, that company's done an incredible job with their AI integration to the Office suite. That extra, upgrade, I think it's like a $15-20 upgrade per the Office, has really done quite well, and they're executing on all cylinders. They're really doing incredibly well. And if you look at Meta, I mean, their ad revenue showed very strong growth. Their operating margins hit another nice uptick. So it's really hard to really find something negative for those two companies. And for the most part, big tech executed quite well overall. The biggest one, out of the big large cap was Tesla, that really disappointed on their outlook.
Tesla's interesting, isn't it? Of course, we've had that news over the past 24 hours, speculation that perhaps the company is looking to replace Elon Musk, but the company subsequently shutting that down.
Yeah, I mean, Andrew, I think that's a great point there. I mean, first of all, the company has been cutting margins quarter after quarter after quarter. And for, when you look at margins being cut and you're competing on price, that's never been good for stocks historically. Now, this is a technology company, not an EV company specifically. They are built on the technology side, but yeah, I mean, I think it's an important thing for the reins to be shifted away from Musk. Now, Musk is one of the most brilliant people there is, but he's been very, focused elsewhere, for lack of better words. And I think it's an important thing for investors to see somebody who's going to be there day in and day out to be truly focused on this company.
What do you see more broadly, perhaps away from tech, some of those other companies that have reported, such as, well, particularly those consumer-facing ones, McDonald's, for instance, Coca-Cola, Caterpillar also, in terms of what we're seeing with industry?
Yeah, I mean, there's been some mixed results here. I mean, ultimately, we have to pay attention to what the tariffs are going to be doing, to the outward, guidance. And, the forward-looking commentary was troublesome, right? I mean, you're looking at an environment that's very uncertain, and these companies made those comments on their calls. Now, we had some mixed results from across the board. If you look at retail, other consumer electronics, and even other hospitality, we've seen sort of mixed results. We had, even on the travel side, we've had some, negative results. So, I think we have to sort of digest what's happening with the current economic environment on the macro side. And I think we're coming into difficult times. And I think this uncertainty is not going to go away. And as I previously stated, I think the summer months are going to be very volatile. And I think the volatility will be more on the downside. So, I'm a little bit more cautious here coming into the summer.
And given that, Brad, of course, you have been bullish on gold for quite some time now. Are you holding that opinion at this point, given it has come off quite some way just in the past 2 weeks?
Yeah, I mean it's performed phenomenally well over the last several years, and looking at even the charts that you're putting up there, I mean the chart looks like we're at a support level. If we hold this level, we're going to make new highs. I'm pretty sure of that. If we break this level, we'll retest a little bit downward, but ultimately this environment is very good for more traditional conservative measures, and I think precious metals are a great asset to be invested in. And I think even in an upward market, they're still the right investment class to have exposure to. So I'm not saying to be fully invested only in precious metals, but I think most people should have exposure for sure.
Brad, what are you seeing in the energy space? Of course, that has been under pressure, particularly oil, on the prospect of lower economic growth, but also the fact that those OPEC plus nations are looking to ramp up production.
Yeah, Andrew. I mean, wow, it's been like daily where we're getting so many cross currents on some news. I mean, even today, I think it was when Trump made the comment that any company that does business with Iran or purchases oil with Iran will not be doing business with the U.S. I think he made that comment today. I mean, it's come down. I mean, obviously, it's I think around like 62 plus minus per barrel. I think there's more uncertainty here too. I mean, what's happening in the Middle East and what we've even seen with some of the aggression from the U.S. in the region. I mean, I think there's more of an upward surprise than downward risk here. I think at $62 a barrel, I don't think there's much downside here. So I think people who are invested, I'm not concerned by holding an oil position. I think there's more upside here in the near term.
Brad, always great to get across what you're seeing. Thanks for joining us from Unearthing Opportunities.
Thank you, Andrew.
Let's return locally then. Before we get going on this Friday, we are actually expecting a low open. We did see this yesterday, mind you, and then we saw that reversal. So interesting to see how this plays out when we get going. In a couple of minutes' time, join us then.